Yo, what is going on, guys? Welcome to another video. And in today's video, I just wanted to make this quick, but I also wanted to put this out because I feel like it will be helpful. This is going to be another volatile week for sure, no doubt, because there's just a lot going on. And just to reiterate my thesis, or at least like what I plan to do. I mean, everyone's free to do what they want. I support everybody being able to do whatever they want with their money. I still don't plan to buy stocks. I am going to be patient because I think we're dropping lower. It's really that simple. And I made plenty of videos explaining that. But what to expect this week regarding stocks starting tomorrow. I wanted to put this out there because I don't know if everybody knows this, but I just want to make sure for those who are listening to these YouTubers who are telling you to buy the dip and I just bought $20,000 worth of this stock and blah, blah, blah. Just want to make sure people are aware of this. So Jerome Powell does speak on Tuesday. It's not directly we don't know, but it's not directly a FOMC tied meeting, right? You know, he's speaking to like this, like this Native American group or something like that, I think. So you've got that going on. And who knows what he's going to say? You know, nobody knows. So that's something to keep in mind. You also have April new home sales data that comes out. That does get released tomorrow. Wall Street will be paying attention to that. Then Wednesday is when things start to get really, really interesting. A little bit more dicey, a little bit more volatile, right? At least however the market determines it, right? So Wednesday, you've got the minutes that come out from the May FOMC meeting. They will be released. And as most of us know, markets always pay attention to this. They always do. And what investors will be looking for is further confidence that the Fed will be looking to go with their plan of increasing rates by 50 basis points in both June and July. So that'll be interesting. Thursday, you have the GDP numbers, so be on the look for that. Friday, you have the PCE inflation report. PCE, as you know, is one of the Fed's favorite inflation looks. The Fed really looks at that. And that means a lot to them. And the forecasts, once again, are looking for a cooling in inflation. Now, the CPI and PPI in March and April and PCE in March all were higher, but they were all lower than estimates. So take from that what you will. Even a slowing in inflation isn't exactly likely to change the Fed's plans to increase rates by 50 basis points over the next two FOMC meetings, June and July. The Fed seems to believe, and this is just my opinion, that they themselves have fallen behind the curve. And now Powell and the other Fed officials have been very clear that rates will increase pretty much no matter what the present inflation data shows. So it matters. They're going to look at it. But at the end of the day, we're starting to see signs that the Fed themselves believes that they are behind the curve. That's why they're starting to get a lot more aggressive and hawkish. And Jerome Powell has made very clear that he wants to fight inflation. Now, we did have some tech earnings. We got some more tech and retail earnings coming out this week. Now, we just had, we didn't have earnings, but we had Snapchat come out and pretty much crash the market at the very end of the day and after hours. Because they basically pulled back on their original guidance and they just came out and just straight up said, yeah, it's not looking good, guys. Which, again, is pointing to the fact that the macroeconomics are having a major impact on the overall economy as well as the stock market. I mean, literally, a small company like Snapchat was able to basically bring the entire market down in after hours. That's pretty remarkable, right? So you've got that. And overall, I just want to reiterate that the biggest reason, in my opinion, why the market is behaving the way it is because the market is afraid of inflation. And like I said, you can't fight the Fed, and I plan to be strategic. I'm going to sit back and wait on the sidelines. Now, remember, I have money invested, so I'm good at the end of the day. I've got money in my index funds. I've got some individual stocks, but most of my money is in index funds, but I am invested. But for me, I'd rather keep my cash and be patient and wait. And the main reason why I'd rather do that is mostly because I think things are going to continue to get ugly, and I know I've reiterated that before. But I just want to throw it out there of what's going on in the market so everybody's prepared and they know what's coming up, and they understand that this is, again, going to be a volatile week. So when things start making these crazy swings, don't be surprised. And please, for the love of God, do not get caught up with these crazy YouTubers who are going to keep trying to pump and tell you to buy these stocks and things like that. Remember, they're only doing it for views. They're only doing it to make you feel good. They're messing with your psychology. And at the end of the day, they just want you to watch their video and they want you to sign up for their Patreon and their course so they can make money off of you. They're not actually here to help you. That's why many of them will not tell the truth, but I will, which is the fact that I strongly believe the market is going lower. So buckle up, get ready. It's going to be a long year, going to be a great year, but it's going to be a long year. This will be a great year to build some generational wealth, but you just got to make sure you're patient and you wait until the time is right. And in my opinion, the time to buy stocks is not now, but the time is closely coming. You know, you're licking your chops. You're like, ooh, I can't wait. You know, but it's not quite time to go in yet, at least in my opinion. So there you guys have it. That'll go and conclude today's video. Thank you guys so much for watching. Feel free to like, share, and subscribe, and I will see you guys in the next one.